What up? What up? So it is the 14th of January. It seemed like 2025 already flying by, and you're probably scrolling on here because you're stuck somewhere, but trying to decide what you're trying to do, or you just fell upon trading through a bunch of YouTube videos. But other than that, I'm glad you can join me today. We're going to be discussing. I already know you've seen the topic. But when it comes to trading, there are two popular. I wouldn't say they call strategies. Um, they're two proper. They're two methods of trading that's pitched. Which what I'm talking about today is swing trading or day trading. Both of them have their own strengths and weaknesses. We're gonna discuss that a little bit. But for beginners, it can be overwhelming to decide which one to choose. All right, and I'm going to help you with that a little bit. We're going to dive into the world of swing trading and day trading. All right, explore the differences and figure out which one is really better for you to start out. All right, one of the biggest challenges beginners face is that when it comes to choosing between swing trading and day trading, is simply understanding the basics. All right, day trading, for example, involves making multiple trades throughout the day. With the goal of closing out all positions before the market closes. It requires significant amount of time and attention, all right, as well as a solid understanding of technical analysis, market movements. Swing trading, on the other hand, involves holding positions for longer periods of time, often overnight or even for several days. All right, approach requires a different mindset and a different set of skills. All right, another challenge beginners face is the sheer complexity of these trading methods. Both day trading and swing trading require a deep understanding of technical indicators, chart patterns, risk management techniques, and can be overwhelming for somebody who's new to trading. All right, and it's easy to get caught up in the excitement of making trades without fully understanding the underlying principles. Additionally, both trading, methods of trading require significant time commitment, which can be difficult for those who have busy schedules and obligations. All right. Furthermore, the fear of loss is a major psychological barrier that a lot of beginners face. When it comes to day trading, the risk of significant losses can be higher, especially if you're new to the game. All right, especially similarly, I hope I'm saying that word right. With swing trading, the risk of overnight gaps or unexpected market movements can be daunting. For beginners, it's essential to develop a good risk management strategy that works for them and to understand the losses that are a natural part of the trading process. All right. Trust me, swing trading takes a little bit more patience because you're not going to get in and get out. All right. It might take a few days. It might take one day. All right. Finally, the sheer amount of information available online can be paralyzing. All right. There are a lot of options out there. I know you've seen, if you've been in scrolling for a little while, or you've been trying to figure out this trading thing for a few months or even a few weeks. There's a lot of different options, strategies, techniques out there, and it's easy to get caught up in analysis paralysis. Beginners need to be able to cut through the noise and focus on what really matters, developing a solid understanding of the market and creating a trading plan that works for you, not for anybody else. It needs to work for you. All right. When it comes to pros and cons of swing trading and day trading, all right, and this is my 10-minute rant, guys. So if you're brand new to the channel, I always do a 10-minute rant before. Sometimes it's a little bit longer, sometimes a little bit shorter. All right. But if you want to cut through the rant, you can always skip forward to the next block. All right. Like I was saying, when it comes to the pros and cons of swing trading and day trading, there's some key considerations, differences to consider. All right. On one hand, day trading offers potential high returns, especially for those who are very skilled. Keep in mind what I said, very skilled at technical analysis and making quick, informed decisions. On the other hand, day trading can also involve high risk as well as significant time commitment. Swing trading, on the other hand, offers a little bit more relaxed pace with less time spent in front of the screens and more time for analysis and reflection. However, swing trading also involves overnight risk and the potential for higher losses. All right. But that all comes into risk management. All right. and I'm gonna show you a strategy that help you out with that. One of the biggest cons of day trading is the sheer amount of time and energy required. Day traders need to be constantly monitoring the market, all right, making trades and adjusting their strategies on the fly. This can be exhausting, pretty much, all right, especially for those who are new to trading. Swing trading, on the other hand, like I said, it offers more relaxed pace, all right. According to many experts, swing trading is often a better fit. Now, I understand if you listen to this and you're a swing trader, I mean, if you're a scalper or you're intraday trader, I'm just going to tell you from my point of view. This is my point of view. You don't have to agree with me. I don't care if you agree with me. It works for me. But I agree with some of the experts say. It's a better fit for beginners because it allows more flexibility and more a relaxed pace. All right. Swing trading also involves less time commitment, which can be a major advantage for those who have busy schedules or obligations. I do this for the 9-to-5 workers, for the ones who have families, for the ones who have jobs during the day, who want to make some extra income. Swing trading for me on the daily time frame is key because if you're married and you have a job and you have a side business and you have kids and they have volleyball, soccer, basketball, football practice, see what I'm saying? It's going to be pretty hard to sit in front of this chart trading the Asian session because they got to be at basketball or you at a job and you're trying to trade New York session. So what I'm saying is that swing trading allows more time for analysis because each candle is 24 hours. So then you have your time where there's a spread widening, where there's some markets like indices that might be closed for an hour, whatever the case may be. But there's a gap where I say it's closed. It's not closed, but the spread widens where you're not going to take a trade anyway for about an hour or two. So you have time to look at 30-something pairs, where if you're brand new, don't look at 30-something pairs, all right? But you have time to find your strategy on different pairs on the daily time frame, reflect on which way it's going, key levels, and which can be essential for developing a solid understanding of the market. I've had people tell me, well, if you're brand new, why are you looking at the daily time frame? You're not going to be able to get so many trades and get no reps in the market. I beg to differ, because I'm going to show you in a second. I have 40 plus pairs and I have one solid setup. All right. I back tested this setup over and over and over, and I forward tested. I've been trading for 7 years now. And trust me, if you do your own analysis with trading the daily time frame, you can spot this setup when you're scrolling through. Oh, there you go. Boom. Now let me go into support resistance. Let me look at, is it at a key level? Is it in consolidation? All right, which way is the higher time frames going? Is it all bullish? Is it all bearish? Is it bullish, bearish, bullish? You know what I'm saying? On the weekly and the monthly. You get what I'm saying? So you have time to think about this. All right. But other experts, on the other hand, however, argue that day trading can be a great way for beginners to get started. Like I just said, especially if they're looking for more hands-on approach. Day trading allows for more control over trades and can be a great way to develop skills quickly. Additionally, day trading can be more exciting as traders get to experience the thrill of making quick profits and losses. This is just my synopsis on it. All right. If you have a 9-to-5 and you are working from 8 a.m. to 4:30 p.m., I'm going to say shy away from day trading because it's going to be really hard. It's not impossible, but it's really going to be hard to do your job and look at a chart and try to take the right trades. Get what I'm saying? It can be done, but I'm saying I've done that before and it failed. All right. I'm not saying everybody else is going to fail, but what I'm saying to me is more relaxed. I have a more relaxed mind frame. When I'm on my job, focus on my job, when I get off and the market is turning over and the Asian session is 1700 or 5 o'clock p.m., I come home, concentrate on trading, look at the setups, proper risk management. 30 minutes. Now it takes maybe 30 minutes, 15, 30 minutes to look at it because I've been doing it a while. Take the trade, right risk management, close the computer. I'm in school. Now I can focus on school. I can focus on family. I can focus on training, going for a run. Those are other things that I can focus on, because me trying to come home, focus on day trading at the beginning. And I'm going to tell you, at the beginning, trying to day trade is really going to be rough and hard because it's the faster pace. Learn proper risk management, learn proper key levels, support and resistance, break and retest, all from the daily time frame because it's slower and it's going to help you get the patience that you need. All right, let's break into the chart real quick, and we're going to go from here. Excuse me. All right, here we go. Here we go. So let me remove that. Let me see. All right, here we go. All right. So as you can see, these, if you look at my symbols right here, these are all winning trades for the month. All right. And they all pretty much started around the 8th. All right. So if you look, this is the start of the month, which was January 2nd. All right. Now, if you look, it took a week to get these trades. So we're on the second week of the January and it's flying by. So if you look right here, let me show you my the all right, the all listing. All right, now I look at all these pairs. Let's open them up. All right. If you're looking at my all pairs, 49 pairs. All right. 49 pairs because that includes indices and crypto. All right. If you're brand new, I would say stay away from indices and crypto. Focus on your major pairs and your minor pairs. All right. So right here, what I do is I have it separated. See right here, I have everything that didn't have my setup so far this month. And so I'm going to look for more setups on that one. These are the setups. If you can see the wins right here and the losses and the potentials and this right here. Let me get rid of that because I'm not with them anymore. All right. And let me get out of this. All right. And potential. Let me look at potential. All right. Nope. Let's take this one off. And this was a loss right here. All right. If you can see right here, I got out pretty early. I got out right about here. All right. So I lost 49 on that one. All right. Yes, I did try funding pips. The 5K the 5K challenge was the instant funding. But the problem is with the instant funding, and I'm not going to go too deep into it. The problem with the instant funding is that you have to get out when news happens. And I'm a swing trader, so I stay through the news. So with the instant funding, you have to day trade, and I'm not a day trader. And I'm currently still once I found out those rules, which I should have read beforehand, once I found out those rules, I was like, yeah, this one ain't for me because I swing trade and I trade through the news. See what I'm saying? So, and they told me that if I trade through the news, it'll be a breach and then I would lose the account. So basically I have the account still in limbo, trying to figure out what I want to do with it because I do not day trade anymore. I'm not profitable. I'm gonna be first one to say I was not profitable because I was trying to trade while I was at work. And even now that I'm retired now, I really don't care for day trading because there's other things I could be doing. I'm in school and other things to make money versus sitting in front of a computer screen all day. All right. So let's go with GBP. Look, if you look at this, see one. All right. So that's 119. All right. So my strategy, go to and the last video I had would explain exactly what the strategy is. But if you look up top, somewhere right here, it'll be posted. Go back to that one and then come back to this one after you figure out my strategy because I'm not going to go too deep in there. But 2 candle highs. All right, 2 candle highs, one, two. If you look right here, I have the all I have is the SMA, and I'm going to show you that real quick. Indicators. All right, SMA. All you're going to do is type in SMA and the indicators. Simple moving average. All right, and then right here, I have the 20 close. All right, pretty simple. And then you look at the ATR. All you got to do is go to indicators. All right, average true range. Just click on that. All right, go to the settings box, length, SMA, and then put it on chart. I got the 5 SMA. So if you look at it right here, all right, one, I marked off. This happened on the 8th. All right, and this happened on the 9th. All right, on the 9th. And then the weekend happened. So the 9th was the, no, hold on. The 9th, oh, no. Well, the next was probably a Thursday. Friday, yep, Thursday. It happened, right? All right, so if you look right here, as we scroll over it with the horizontal line, that is, let me bring myself down. Okay, I'll just keep it like that. All right, so if you scroll over, it's 119 pips, right? So I go 1 for 1. The reason I go 1 for 1 is because if I'm trading, if I have 15 trades but lose 1, that's 13-1 or 13-2 if I lose 2. All right. So risk properly, I'm still up for the month. You get what I'm saying? So 1-to-1 works because for me, because of the simple fact is if it's in volume. I trade in volume. All right. And it works for me. It might not work for everybody. All right. So look at 119, boom. And it actually took let's see, the 9th to I got in the 9th. So I got in the 10th, 1, 2. So it took the weekend. So it took about 3-4 days. All right. 3-4 days through the weekend. You held it through the weekend. Yes. You might have some swap fees and that it depends on the pair. But the swap fees, might be like $2 or $3. You know what I'm saying? But if you have, a 0.10, you got, $119 from that one, or so on and so forth. And if you look, all right, let's go to the next one. GBP CAD. Look at that. This one happened the second week, basically. Yeah, pretty much the end of the second week. All right. And this took 1 day. All right, look here. 135 pips, 135 pips. Let's go to the next one. All right. This one was moving into consolidation a little bit because, but we still made it because if you look right here, the first break of NCD USD happened in October. And if you have retest, you could have took one right here. Another retest, took one right here. Then here's the third one, retest right here. So it's probably going to consolidate. But at the same time, you look, we had retest, 1, 2. All right, 50 pips right here. 50 pips. And you're in and out. All right. Now it depends on exactly what the spread was because you might have been down here somewhere. It depends. But I would say wait. If you look up here, the spread is 0.6 up here. All right. Let's go to the next pair. All right, look at that. All right. That's what I said. Some of these things you can hold for longer. You can hold for longer. If you go to the Heikenheimer, you can see. You can right here, you get out, come back in right here. So, but you could have held it all the way down to here until it crossed over, got out. Yes, you would have gave some funds back, but you still would have been in profit. All right. Let's just focus on this month right here. All right. Retest. 1, 2. Now I don't do retest. I do the break of the SMA. And if, like I said, if you go to the next video, if you never see my strategy, go to the video I just showed you or down in the description, you'll actually see my strategy. So 2 candle highs, 2 candle highs, 1, 2, completely not touching the SMA. All right. And 55 pips. Boom. You got in on the 9th. You got out on the 10th. All right. Pretty quickly. All right, look here. Start of the month. All right, 1, 2. If you look right here, look at the bottom left, it says 56 pips. What do you know? 56 pips. Got in on the 9th, got out on the next week, basically. All right, that Monday. All right, so it took you a little second. So it's okay though. Okay, 1 retest. A lot of them had retests this month. EU, look at that. That is 81 pips. Basically hit TP the very next day. All right. And look here, AUD CAD. We just going through these. We're going through this one by one. This is clean price action right here. So on the daily, you can definitely see this price action, how it's running. All right. Very smooth. And I'm going to tell you on the daily time frame, it's actually a lot easier to spot consolidation. I'm not saying you're going to spot it all the time, but I'm saying it's a lot easier to spot consolidation. All right, look here. 2 candle highs. All right, 1, 2, that's 58 pips, hit it on the next day. First of the month, all right, EuroCAD, 1, 2, 86 pips, boom, you got out in that Monday. All right, so it took you 3 days. All right, look here. GBP NCD, all right, 1, 2, completely 2 candle highs, completely not touching the break below the SMA, completely not touching the SMA, no wicks, no bodies, nothing. All right, 144 pips. Look at that. Got in 1 day, got out the next. Move on to the next pair. All right, so when you check these pairs, right? You know when you check them, you place them on the day. Let's say you place it on the Thursday, right? All right. all right, 5 o'clock or 6 o'clock, 7 o'clock, whenever the spread's lower, right? You don't check it till the very next day. And guess what? A lot of these pairs you would have closed out in profit, but you were doing everything else with your family, other stuff, going to the gym, not even focusing on this stuff. And guess what? It's money. It's making, I wouldn't say it's passive money because you got to do something to make it. But I was saying you're in profit making money while you're doing other things. You get what I'm saying? You could be making YouTube videos like me. You could be working out, running, out kind of while you're at your job making money. You could be making money on the side. That gives you time to study how and make extra money to put in the Roth IRA, to put in stocks, to open a business on the side. You know what I'm saying? You got the sky's the limit. Let me not get too deep off into it. And if you look, GBP Chef still going. All right. Let's see. All right. 2 candle lows. One. Remember, the buys are 2 candle highs. 2 candle lows. The sales are 2 candle highs. Sell, 2 candle highs. Buys, 2 candle lows. All right. Write that down so you can remember that. All right. 2 candle lows. All right. I'm sorry. 2 candle highs. All right. 1, 2. All right. Look at that. I don't know where this one went. Did I erase it? All right, look, 81. 81. 81. Look at that. Boom. All right. Basically had that news yesterday, pushed back up, and now guess what? It's going back down to hit that TP again. Watch. All right. And that was 81 pips. All right. And let's go to, so we had this one right here. 1, 2, and be careful with the indices. I'm just showing you this. But be careful with indices because it requires a little more capital, and it definitely, if you have a smaller account, you don't want to trade all these pairs with the indices. All right, so if you're a beginner, let's just erase the indices off of here. All right, for you. All right, look right here. All right, so this was green the other day. All right, so I don't know. Sometimes I guess because I use forex.com pairs, I don't know what's going on, because if I go to another pair, this is can potentially a green. All right. So if we look right here, all right, and on the second was 145, 145. Got in on the 9th. All right. Jumped in on the night of the 10th, stayed over the weekend, hit that same TP, that same weekend, that same week, or that same day. Look at this one. 1, 2, we spotted it on the 9th, clear break, no touching wicks, touching the SMA. Boom, we came back. Okay, that's our second entry. We're going to get in when the spread comes out. We look at 42 on the ATR. Look, 42.6. All right. Hey, the next day didn't, that Monday didn't. Oh, let me go back. That Monday didn't do nothing. All right. And then guess what? The very next day it hit. All right, now let's go to our loss. All right. So what I did was, hey, look right here, boom, boom, all right, and it was 84. All right. So potentially, I was in this one, but once I seen this candle break below, and let me turn this one red, break below that candle, right? I just got out. I was like, there's no point to stay in. See, once it broke below this one, all right, I got out. See what I'm saying? Because it was like really no point to stay in it because it was going to end up hitting my my stop loss anyway. And that's what it might and it might not. See right here, this actually spread might have hit my my stop loss. And so instead of getting 84 pip stop loss, all right, I got a what was it? 48. So I lost $41 on that one. Instead of losing $84, I lost $41. Get what I'm saying? So let's do the calculator. Let's see if we can do the calculator. It's time for the calculator. It's time for the calculator. All right, let's see if we can see this calculator. All right, and let me go off and go from square one. All right, and we just go off on 0.10s. All right, look, 119. All right, and let's go to the next one. All right, 135. And let's go to this one. 50. Let's go to the next one. 55. Let's go to the next one. Let's be doing some quick math. 55, 56, 56, 81, 58, 86, 144, 144. All right, let's move to the next one. 81 and 145 and 42. And so let's take this loss minus 41. All right. So that's 1,000. That is 1,000 for 1,011 for the month. All right. All these pairs. So you got 1, 2. Let me move this out the way. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All right. 13. You was 12 and 1, right? You made. Let me put this up here. 12 wins. Excuse me. And 1 loss for the month. That netted you 11, 11, basically 1,011 bucks. All right. So you get what I'm saying? 12 trades, 1 loss, daily time frame. All right, daily time frame, 1,000 bucks for the month. All right, and you can kind of say it's passively, and it's not passively, but it is kind of passively because while you're working, tell me this. Tell me that if you're working another job, right? When you're working your other job, and somebody just at the end of the month comes, hands you an extra 1,000 bucks. Tell me you wouldn't accept it. That's basically what we're doing on the daily time frame. You're just taking your time and having another stream at payday, and this is just the middle of the month. This is the middle of the month, and we've already made $1,000 swing trading. See what I'm saying? I'm not saying anything else about somebody who's scalping. Well, I made more than that in 2 days, but we're talking about strictly for the people who work for a living. You don't have to quit your job to make money in the markets. You can swing trade it. All right. I hope that made sense. All right. I hope that made a lot of sense. All right. In conclusion, all right, the debate between swing trading and day trading is far from over. All right. Both strategies, both types of trading have their own strengths and weaknesses. The best approach for beginners will be depend on their individual goals, risk tolerance, and personality. Whether you're a beginner or experienced trader, the key is to find a strategy that works for you. And we're not talking about experienced trader. We're talking about beginner trader. And to develop a solid trading, a solid understanding of the market. All right. Other than that, I do have a Discord. All right. It does cost. I do put out these trades monthly. Not monthly, but I do put out these trades that we take throughout the month. All right. If you are a person that is looking to learn, I do have a lot of videos. I do weekly sessions. All right. The link is down below in the Discord. Other than that, all gas, no brakes, and y'all have a good trading month.